Now, eyes are on whether the US Federal Reserve will announce a rate hike in September following Janet Yellen's recent remarks that a case for raising rates has strengthened. However, market watchers say a hike in December is more likely. Kim Min-ji with the details.
Could a U.S. rate hike be on the horizon? Fed Chair Janet Yellen said last Friday that the case for an increase had strengthened in recent months thanks to improvements in the labor market and expectations for solid economic growth, raising speculation a hike is in the pipeline. Although Yellen did not specify the timing, she said the U.S. was nearing the Fed's goal of maximum employment and price stability.
Well, she's obviously looking at labor market conditions, and I think specifically the impact that a stronger, tighter job market may have on the prospect for rising wages. I think she's accepting that economic conditions are supportive of a rate hike.
However, most watchers believe a rate hike will come toward the end of the year, not at the Fed's next meeting in September. CME Group sees a possibility of an increase of 58% for December, while Bloomberg forecasts a 62% chance. This as the U.S. still has to gauge the possible fallout from Britain's decision to leave the European Union, and because Europe and Japan are pursuing negative interest rate policies.
We do think that she's okay with hiking rates sometime in 2016, but the market's perception of what's going on today is that they are more inclined to hike in December versus September.
The Fed raised its interest rates for the first time in nearly a decade last December, but has since kept its rates steady on the back of a global slowdown, market volatility, and tepid economic data. The Fed has 3 more policy meetings scheduled for this year. Kim Min-ji, Arirang News.